It's a strange thought, isn't it, that as life gets harder for many, someone, somewhere, might actually be profiting from that exact struggle. I've been looking at how things are changing, how essentials like a place to live, getting an education, or even seeing a doctor feel increasingly out of reach for so many. It's not just bad luck, and it's not just inflation in the old sense. There's something else at play. I started to connect some dots, looking at how our society is structured, especially financially, and a concept kept coming up, something called financialization. Now, that's a mouthful, but what it boils down to is pretty straightforward, and honestly, a bit unsettling. It means that things which used to be primarily about human need, like housing for shelter, education for knowledge, healthcare for well-being, are increasingly treated as financial assets. Think of them like stocks or bonds, things to be bought and sold primarily to make a profit for investors. Their main purpose shifts from serving people to generating a return on investment. And this is where it hit me, this core idea. You live worse, they earn more. It sounds harsh, but when you follow the logic of financialization, it starts to make a disturbing kind of sense. When a basic necessity becomes, first and foremost, an investment, its price stops being about what ordinary people can afford. Instead, it's driven by what investors expect to gain from it. It's driven by speculation, by the potential for future profit, often fueled by making that very necessity scarce or harder to access. Let's break this down. Consider housing. For generations, a home was primarily a place to live, to raise a family, a cornerstone of stability. Of course, there was always a market, but its fundamental purpose was shelter. Now, increasingly, vast swaths of housing, especially in desirable urban areas, are bought up by large investment firms, private equity, or even wealthy individuals, not primarily to live in or even to rent out at affordable rates, but as assets they expect to appreciate in value. They might keep them empty, waiting for the market to rise. They might convert them into luxury units. The more demand outstrips supply, the higher the prices go, and the better their investment performs. So, as finding an affordable home becomes a nightmare for a growing number of people, as they live worse, paying more of their income in rent, or being forced into smaller spaces, or further away from their jobs, the value of those housing assets held by investors goes up. They earn more. How does this apply in life? Well, when you're looking for a place to live, and everything seems impossibly expensive, it's worth considering that you're not just competing with other families. You might be competing with global capital that sees that apartment building or that single-family home as a line item on a spreadsheet, an instrument for wealth accumulation. Understanding this doesn't magically lower the rent, but it does change your perspective on why it's so high. It's not just the market, it's a specific kind of market, one increasingly dominated by financial motives over human needs. Then there's education. Higher education, in particular, was once seen as a public good, a way to create an informed citizenry and a skilled workforce, often heavily. Now, it's increasingly a product to be purchased, often at an exorbitant price, leading to massive student loan debt. This debt itself becomes a financial product. It's bundled, sold, and traded by financial institutions. The student, struggling for years, even decades, to pay off loans for a degree that may or may not lead to a high-paying job, is the source of a steady stream of income for the holders of that debt. The more people who need to take on large debts to get an education to compete in the job market, the larger the market for student loans, and the more potential profit for those who finance them. So, as students and their families face increasing financial burdens for education, as their financial well-being potentially worsens, the entities holding and trading that debt can earn more. This insight can be applied by reconsidering the value proposition of certain educational paths. If a degree means crippling debt, it forces a harder question. Is the potential career benefit worth that long-term financial servitude? It might encourage seeking alternative education, vocational training, or advocating for more affordable public options, rather than passively accepting debt as the only way forward. In healthcare, this is perhaps the most visceral. When your health, or the health of a loved one, becomes a source of profit, the incentives can become terribly skewed. Pharmaceutical companies charge astronomical prices for life-saving drugs because they can, protected by patents and driven by shareholder expectations. Insurance companies create complex systems that can deny care or create huge out-of-pocket expenses to protect their bottom line. Hospitals can operate like corporations, prioritizing profitable procedures. When people are sick, they are vulnerable, and that vulnerability can be exploited for financial gain. The sicker the population, or the more complex and expensive the treatments, the greater the potential revenue for certain parts of the healthcare industry. Again, as people struggle with access to care or face medical bankruptcy, as they live worse or fear doing so, certain sectors are undeniably earning more. Applying this understanding in our lives means becoming a more critical healthcare consumer, questioning costs, advocating for transparency, and supporting systems or policies that prioritize patient well-being over profit maximization. It means understanding that market-based healthcare can mean that your ability to pay, rather than your medical need, becomes the primary determinant of the care you receive. So, this isn't a conspiracy theory. It's an observation about how the logic of financial markets, when applied to essential areas of human life, can lead to outcomes that are great for investors, but detrimental for the general population. It's about a shift in priority, where the asset value of your home, your education, or your health treatment takes precedence over your access to it or your wealth. What also became clear to me is how this system perpetuates itself through the very insecurity it creates. When people are financially precarious, worried about losing their homes, affording education, or paying for medical bills, a whole new market opens up for financial products to manage that risk. More complex insurance, private retirement plans to replace shrunken public ones, investment advice. The anxiety itself becomes a commodity. And it's not just these big three. Think about public infrastructure being privatized. Toll roads, water supplies. What was once a shared resource, managed for public benefit, becomes a revenue stream for private investors, often leading to higher costs or reduced service for users. Your daily commute or your glass of water can become part of this dynamic. The really insidious part is how normal it has become. We're told it's about efficiency, about market forces providing the best outcomes. But best for whom? If the best outcome for an investor in a rental property portfolio is rapidly rising rents, that's directly opposed to the best outcome for the tenant, which is stable, affordable housing. This isn't about demonizing individuals who invest. People invest to secure their own futures, often within the very system we're discussing. It's about the system itself, the rules of the game, and how they've been. It's about recognizing that when the primary purpose of providing something essential shifts from fulfilling a need to maximizing profit, the outcomes will inevitably change, and often, not for the better for the majority. So, the next time you hear about record profits in the real estate market while homelessness is rising, or booming business for private student loan companies while graduates are drowning in debt, or pharmaceutical companies posting massive earnings while people skip vital medication due to cost, remember the simple, stark connection. You live worse, they earn more. It's a lens, a way of seeing the world that, once you start using it, is hard to unsee. And maybe, just maybe, seeing it clearly is the first step towards imagining something different. So, what can we actually do? Understanding this isn't about feeling helpless. It's about gaining power. Small shifts in our daily choices can collectively make a difference. When it comes to housing, we can support local initiatives that prioritize community needs over pure profit. Think about cooperative housing or advocating for more affordable public options in your area. In education, look beyond just the big-name high-cost institutions. Explore community colleges, vocational training, or even free online resources. Support public education, funding. For healthcare, be an active patient. Question costs, understand your insurance, and support policies that aim for universal access rather than just corporate profit. Look for nonprofit providers if available. Even how we bank or shop matters. Choosing local credit unions over massive banks, or supporting small businesses instead of just giant corporations, keeps money circulating within our communities. These might seem like small things, but imagine if many of us started making these more conscious choices. It's about shifting our own small part of the demand. It's about valuing human well-being over abstract financial gains in our everyday decisions. This won't change the world overnight, but it can create ripples. It helps build a different kind of awareness and, potentially, a different kind of system, one small step at a time. Thanks for sticking with me through this. I hope it's given you some food for thought. Check out the description below. There might be something there to help.